Welcome back, and still with me in studio is Dave Moore, Citadel's Chief Investment Strategist. Madeleine Schubert is Tax and Fiduciary Specialist at Citadel as well, and Professor Alan Hirsch, who's the Director of the Graduate School of Development Policy and Practice at the University of Cape Town, also the former Deputy Director General of the Department of Performance Monitoring and Evaluation in the Presidency. Alan, let's start off with you. You alluded to just before the break inclusive growth. Let's look at the kind of balance that's being struck between social security and job creation here, because we've seen a substantial increase in social spending over the past decade. It's financed a threefold increase in the number of people that are now receiving social grants, and that's staggering. It makes up, 60% of the budget right now. Is this dangerous, this culture of dependency that we seem to be creating, or certainly that the impression being given?
Well, the 60% includes the health budgets and the education budgets as well. But it is a large amount. We have a lot of people, I think close to 17 million people receiving social grants of one kind or another. I don't know if we've got very much choice. We're in a very exceptional situation in South Africa. The level of structural unemployment is extremely high. And some social research, all the social research that I've seen that looks at the impact of social grants, particularly the child support grant, suggests that both the health outcomes and the educational outcomes of children who have the benefit of the child support grant are improved. And that's very important if we're going to be thinking about the next generation. So I don't think we have a choice. Now, if you look at the current budget, the increases in the amounts that are being given to all of those social sectors seem to me, if I've read it correctly, slightly below inflation. So we're not increasing the level of commitment to those activities all that high. Now, for me, it's a choice partly between the social protection and social services, because social services are really critical, and particularly, as I said earlier, education and health. And there, it's not so much how much money is being spent or how well it's being spent. I think Dave said that earlier, and that's terribly important. If we could improve the quality of social protection spend, people talk about the social wage as that part of people's income that government provides, and it includes social protection, free basic water and electricity, and relatively free or free education and health. And the quality of that social wage has to improve, otherwise people are not living in great circumstances. So I don't think we have very much choice in that. At the same time, we need to be doing things that increase our ability to encourage private sector investment. The ratings agencies talked very often, as they were heading towards our downgrading, about our inability to address inequality. And I think that we have to find ways to address that inequality in a range of ways at the same time. We can't just use one mechanism to do that, and we haven't quite cracked that yet at all.
Dave, of course, we've got poverty alleviation, which sees resources shift to the consumption side of the economy, versus poverty reduction, which sees resources shift to the production side of the economy. Surely we need to start seeing a little bit more of the latter, that productivity alleviation. When do we start seeing that shift? You've been beating on that drum of growth needing to come through first.
If we look at it, I was surprised this year there was less of an emphasis on moving away from consumption spending to fixed investment spending. I think that's because of the overall pressure on spending, due to the weak economy that we've got. And I clearly think that is something that we need to address. However, here we have the same thing. There's certain things that the budget can do and certain things that the budget's got very little control over. And that's the unfortunate part of it, is to look at the infrastructure spending at local government level and provincial government level. Again, the capacity to implement the projects, to see them through, to finish them off, does not appear to be there fully. So yes, you can throw more money at the problem, but the real problem is not the money. As I said, we've got R1 trillion budget here just in terms of the income side. So if you look at it from that point of view, I think, again, and it's alluding to what Alan has said earlier as well, we've got to look at the other things that are important. So yes, we have to think about improving the capacity to manage those things and to implement them successfully. And then we can talk about the funding. And I don't think there's a huge funding constraint on that longer term.
We'll be getting to the quality of that fiscal management, which is, of course, key in just a bit. Before we do, to lessen that dependence on the state system, lots of emphasis being made on needing to ignite a savings culture in South Africa, needing to get South Africans to save more specifically for retirement when the time comes. This is what Finance Minister Pravin Gordhan had to say about reforms he sees taking place within that retirement space.
Retirement funds will be required to identify appropriate preservation funds for exiting members who will be encouraged to preserve when changing jobs.
Okay, so quite a bit, that's a very small snippet of what was actually said when it comes to the retirement fund space. But like I said, it's to foster this savings of culture. Overall impressions of the rhetoric that came through on that front, Madeleine?
This is actually a theme that he's been conducting over the last 3 years. So the whole retirement reform space has been under review, I would say at least 3 years, looking at the distinction between your pension and provident fund and retirement annuity. And seeing a way of just really get people when they resign to keep it within a safe haven and not immediately spend it, because you need that money when you retire. So all of this changes that he's recommended is really just to align that, to get a sense of when you retire there is funds available. And by aligning your provident fund with your other two funds, that's a very important step towards it, both from the contribution side into the fund as well as from a retirement or resignation point of view. So that's just aligning all the funds to basically come into the same line.
Do you see that streamlining, and do you see the tax treatment reforms that were proposed for retirement funds, the fact that we need to see simplification on that front, encouraging South Africans at large to invest more for retirement?
It's an interesting question because it depends who you're going to ask. If you're going to ask a high-earned individual, their contributions is basically going to be limited to 350,000 a year. And that will probably put you with taxable income about 1.3 million. So anything below that, that's great. It will stimulate because you will get a maximum tax deduction. Anything above that, it will be capped. Now you can contribute more, but then you will only get a tax benefit when you retire, and a lump sum pays out or against your annuity. So it really depends who you ask. It's definitely going to stimulate, I guess, your middle class and lower income earner. For your high network individual, above 1.3 million, they will definitely take it up till max, 350,000, and then maybe look at alternatives from an investment point of view.
Yeah. So what did you make, Alan, then of the mention of tax-preferred savings and investment accounts to be introduced in 2015? Because this sat on some of the analysts' wish list pre-budget.
Well, clearly, as Madeleine has said, it's really important that lower and middle income formal sector employees look after their own futures. I think one of the concerns of government is that a lot of the social security burden actually falls on in the old age pension is because people haven't saved sufficiently, that people in the working class, people in the lower middle class haven't done that enough. And I think that this budget and the reforms are clearly aimed at people in those categories. And if they can look after their futures more effectively, and if they have instruments which really benefit them and encourage them to set money aside, they'll first of all live better than if they were living off old age pensions. And secondly, there will be more money available for other things for government to do.
Yeah, not only that they haven't saved enough, Alan, but also that they haven't been guided appropriately once they've hit that retirement age. And there, a point being made that retirement funds need to identify appropriate preservation funds, for example, but also offer guidance to those individuals once they take money out. I mean, that pretty much a bold step being made, because it is indicative of more hand-holding needing to be done.
That's useful. I mean, if you follow the sort of current trends in behavioral economics, what you could possibly do is to introduce something which is by default it goes into a provident fund or pension fund, and that you have to elect to leave the system rather than to join the system. That may be something worth considering.
Dave, competition promoted by allowing providers other than life officers to sell living annuities. How do you see that triggering a shift in that landscape?
I think if you look at it, I mean, we've got a huge life assurance industry in South Africa, and to open that up to more competition is always a good thing. I think we would just see to it that, I mean, here we are playing with retirement money. I mean, I think this is a very, very sensitive part of our economy. And so, yes, I mean, the competition thing is fine. But I just want to come back to it. You know, in South Africa, we've had this sea change over the last 20 years of moving away from defined benefit pensions to defined contribution pensions. And what we're seeing here is that the number of people that can cope with that added responsibility, I think, is unbelievably small in South Africa. If we look at the middle, lower income, and I don't want to sort of talk down to people, but I think people don't realize that responsibility because there's been this change. Maybe their parents, etc., they were still on a defined benefit pension, which is, you know what you've got. It should be there more or less in future. But now you've got to save for yourself. You've got to try and build up something that you can, you know, draw a pension from in future. You know, we are in that business. It's not an easy business. Markets are volatile. So I think all of these things, we need to think a lot more because it comes from the sea change that we've had. And these are the adjustment pains that we're now feeling. And if we're not going to look at the middle and the lower income categories, you know, it is true. I mean, people are going to look towards government to supplement that in some way, or in all sorts of ways they'll try and live off an old age pension from government. And that's not what we want. I don't think, you know, so I think the consequences of moving away from defined benefit to defined contribution pension schemes in South Africa, we are now finding out what it really is.
Well, we've got savings on the one hand, accessing credit on the other hand. And I'm going to read from the Finance Minister's speech yesterday. He says that we'll engage with the banking sector to explore how to increase the level and share of new mortgage loans. Small business financing must also be supported to a far greater extent that is currently being done. A lot of focus on what the banking sector and the financial services arena needs to do to actually stimulate and help stimulate this economy moving forward.
If we look at the mortgage comment, I was quite surprised. I mean, we've just come off a huge boom in mortgages that ended a few years ago, and now we haven't had any.
That forced banks to actually tighten the rate.
Yes, and I think if you look at it, I mean, one of our major banks is still suffering from the indigestion of their mortgage book that they had built up, you know, up till 3-4 years ago. So I found that comment, you know, pretty surprising. If we also look at the banking changes, the Basel III changes and all of those things, it's not favorable for mortgage lending either. If we look at the problems in the international economy and also in the local economy, a lot of that was linked to the mortgage lending. So I found that very surprising. I think what we do need to look at is to look at the so-called unsecured lending market, which is a very wide term. It includes overdrafts of people like ourselves as well. But maybe more look at that. And the problem of funding your smaller and medium-sized enterprises, that's an internal problem that we have, whether it's locally or internationally. And those are things that you've got to look at. Yeah. Mortgage lending is not going to solve that now.
Alan, your views on that, because the Minister highlighting that they're in discussion with the National Credit Regulator as well as the Department of Justice and banks to ensure that the lending market at the same time remedies its behavior moving forward.
But if you look at the recent reports of the National Credit Regulator, you'll see that there's quite a sharp shift towards very short-term loans in the unsecured market, and that is disturbing, and I think that discussion has to take place. But at the same time, I think the issue of small business loans is very, very important, and small businesses and medium businesses suffered very badly as a result of the retraction of lending by the banks in the post-crisis period. And I think that in other countries they were able to deal with that issue a little bit better than we were able to in South Africa. So I think the contraction of access to credit for small businesses in South Africa was particularly severe. So we need to find new instruments. I think the Minister was talking about credit guarantee programs, sharing risk between the public sector and the private sector to encourage more investment in the small business sector. We have to do much more of that. There's certainly not enough of that in South Africa yet.
Especially where we're faced with a very uncertain economic environment globally. It's within that context that we've had a lot of pressure being put on the ministry as a whole to actually look at where it's spending and how it's spending. We've been having discussion about implementation most specifically. Let's take a listen to what the Finance Minister had to say in that regard.
In the medium-term budget policy statement, we noted that if the economic environment were to deteriorate, government would reassess its revenue and spending plans to secure South Africa's fiscal footing.
We've already got, Dave, government spending less, encouraged by the fact that, that they're looking to weed out non-productive projects specifically and reprioritize right now where they're needing to prove that they know how to spend that money and effectively spend that money moving forward.
No, I think it's very encouraging that, given the economic circumstances, that they're planning to do the right things. And I don't think you can fault them on planning those things. We might think that sounds very logical. There are lots of governments in the world that don't follow those kind of sound financial principles. But again, it will come down to the how. How do we do it? So I've got, as I said, when I look at the budget, I don't agree with the rating agencies that are negative. I think the general thrust of the budget's right. Mm-hmm. You can't really fault the way they're trying to manage the finances.
Alan, does this put pressure on the plans for the National Health Insurance Scheme and the National Pension Plan? Because there are major questions around this, centered around how it was going to be funded in the first place, and perhaps commentary yesterday highlighting a dawning realization that funding is not accessible, and if we don't get the ball rolling on this, it is not going to work.
Well, it's not going to work as quickly as I think we'd hoped it would. I think the signals we're getting are that there are very important pilots that are being conducted at the moment in this area to see how well it works, and that's a good thing, that we kind of test out systems and see which ones work and don't work. But the Minister did say that, he said quite explicitly that there might be a necessity to raise extra funds to support the National Health Insurance system going forward. We're obviously not in a position to do that at the moment, mm-hmm. but if the pilots are successful and if they really get value for money results and really good health outcomes, then we might find a way to either move money that's being moved elsewhere. And I think there's a lot more cleaning of house that can be done. I was in government actually when the process of trying to clean house in order to rationalize spending for this round began. And we looked at a lot of programs that weren't working very well or were very expensive and eliminated a few of them and reduced some of them. There's still quite a lot more that can be done. And I think in any country, after a period in which the government expenditure has expanded continuously for about 10 years, which it has in South Africa up till recently, you have to kind of use these opportunities to clean house as much as possible and redirect money from what doesn't work to what does work. And there is scope for doing that, and there may be scope for finding more money for the national health system, which is really obviously very important.
Of course, a lot of emphasis being placed on growth needing to come through, that we need GDP growth over 5% in order for the national development plan as a whole to be viable moving forward. At the end of the day, though, many saying that we're inevitably looking at taxes having to go higher moving forward to fund mechanisms like the NHI and of course the National Pension Plan as well. What's your view on that right now? Because to an extent it would affect our competitiveness, or do we have room to maneuver in that regard, hiking taxes specifically on the corporate front?
It's quite a difficult question, because at one hand we need funding from somewhere, and it very strongly alluded that tax rates are going to hike. Whether to put it on the individuals or corporates, that's another question. On the same token, if you want investment in South Africa to stimulate employment, you need new investments, new companies, and you need to make it attractive. So where do you draw the balance? I wish I could give you the answer, but I don't have the answer. I think a trick is really to find a balance where you can stimulate both sides. Investment, growth in companies, and really looking maybe at some of the tax structures implemented to see if there's maybe stringent ways to limit interest deduction, or just look at maybe internal mechanism to find additional profits for the company without necessarily hiking the corporate tax rate.
It didn't come through yesterday because of course it is a political hot potato, a rise in that VAT rate. Do you see that coming through at some point in time?
I don't think we can, for the mass population which is subject to that. Yes, basic foodstuffs is normally zero rate and exempt, so you don't feel that. But for the consumer overall, it will be a very onerous to increase the VAT rate. I don't think the timing is right for that. Not now.
Yeah.
Maybe in time.
Alan, you've been agreeing with
Yes.
Madeleine as she speaks there.
No, well, that remains a regressive tax rate in the sense that people who are below the income tax rate pay VAT, even though there are some exemptions. I don't think that the government would. I don't think it would be wise. I don't think, and the government would take the risk of pushing in that area.
Mm-hmm.
So there are other areas. I mean, there's a lot of interesting new instruments in the environmental area, for example, where the tax system is being broadened around carbon taxes to try to change behaviour. There may be a few other instances of those kinds of interventions, but no, I didn't expect. I mean, I didn't expect either the income tax or the VAT to be affected in this budget or in the next or the next.
Yeah.
What was really interesting though was the fact that they want to register our foreign suppliers of electronic goods, which is interesting because it makes sense. They're supposed to pay VAT, but it's just to go catch them to come and register. So it's just really. Because that in itself will promote, because many people are buying stuff over the internet at the moment.
Certainly that, a very interesting point that was raised in yesterday's session. Well, at this point, we're going to be taking questions from our live studio audience. So we've got a roving microphone that's doing the rounds. And yes, if we could have the question from you.
Question for Dave. Regarding the investment account that they're talking about, the 500,000. We know through history that that's generally been in the market which the life insurance companies have dominated, as you rightly said. But it's also been something that's been very traditionally sold to those people. How do you think government's going to overcome the issues regarding costs on that market in terms of providing a product that can be accessible, that doesn't have to be sold, that can be a low-cost thing that can actually be implemented? Because, as we all know, most people that have made use of those interest exemptions have been the upper income brackets. So how do you think government's going to overcome that challenge?
It's from one of my colleagues, and it's not an easy question.
You can deal with her later.
It's yeah. If you and I think she's quite right. You know, we haven't had a savings culture in South Africa, certainly, and that's why. And I mean, I started my career in the life insurance industry. And so if you look at it from that point of view, it is still something I think needs to be sold. Looking at the costs, we know that there's a big report brewing out there to try and drive down those costs. I think you have to be realistic about how low those costs can go. I don't think you can make it a very low cost alternative necessarily. And this is one of the dilemmas, as I said, moving from a defined benefit system to defined contribution system. We're in the investments business. It's not necessarily a cheap business. When market's doing well, you're doing well. But it's not a low-cost business to run, and that will ultimately be reflected in those costs of those products as well.
Yeah. I think we have one more from our studio audience at this point. Do we? No, we don't? Okay, no hands up. So the audience being a little bit shy this morning. So we'll get them to start thinking about questions a little bit more. So let's move on to Africa integration, Alan, because that highlighted key to the growth scenario moving forward is that we need to be able to regionally trade easier than we're doing right now.
Well, it's absolutely. I mean, trade and investment and movement of people in Africa, in southern Africa and other parts of Africa, absolutely critical to our development and to African development. I think we're in a fortunate position. South African investment and South African expertise has played a significant role in helping our neighbors and countries further north and west grow much faster. And they have contributed to the strength of our companies. We have a lot of companies who are more profitable really in their African operations than in their South African operations. So for our mutual benefit, reducing the barriers to trade, improving the roads, improving the systems of customs between countries, reducing barriers to trade which exist. I just read recently that Zambia and Kenya are in a little trade war over maize. I mean, that kind of thing is really unfortunate. We should be encouraging all of our countries to trade a lot. And there are a lot of countries in the interior, who are landlocked in Africa, who have a lot of potential to grow and to contribute to the productivity of the continent as a whole, who are restricted by the fact that they don't have their own access to ports, they don't control the railway lines running through other countries. So we need to cooperate effectively in Africa to do that. And I think there are a lot of important initiatives through the African Union, through SADC, that are heading in that direction, but the quicker the better.
Dave, of course, that's standing out in a context where, we've got, as you say, growth needing to be in the foreground. A lot of companies in South Africa chasing that growth on the rest of the continent. We've had our retailers, for example, pursuing that pretty aggressively. We've just had a comment come through from Dion Opperman, who's been watching, and he says that the world is in a deferred recession right now. What about job creation? This entire scenario would provide part of the solution, one assumes.
Yes, I mean, but one has to be realistic. If we look at the size of South Africa within Africa, we're very big within Africa, so we really need the global economy to grow. But we are in the fortunate situation, unfortunate from our point of view, but the rest of Africa is growing faster than South Africa, and we've got a lot of expertise in Africa. So I think that gives us certainly a lot of scope. But then we've got to look at the things that Alan talked about earlier as well. Just one last point is, we're borrowing about 160 odd billion rand this year. I think we should be able to do it at unchanged interest rates.
Okay, interesting. A point put on the table there. And where the audience left me hanging a little earlier on, it seems that we've now got a couple more questions from our audience this morning. First question.
Hi there, this is a question for Madeleine. We've seen relaxation of the foreign investment allowance over the last couple of years. What do you think is going to happen in the future?
Okay, Madeleine.
Our colleagues make us work very hard. It's also, I mean, it's a government call again. I mean, do you want money to flow freely cross-border, and how much do you need to protect your own country? So, I mean, the trend definitely has been to relax it more and more and more. Taking it away in totality, I don't know if it's necessarily a positive step, because there's a caution. There's always rather to the caution than too much an aggressive side. Mm-hmm. So I think they might increase it with time for sure, but I don't know if it will actually ever be totally removed.
Okay.
Can I comment? I think the Minister talked about making it easier for companies to base themselves in South Africa and trade and invest in Africa. And that's really important both for South African companies that are already trading and investing in Africa to have some liberalization of the framework within which they can operate in Africa, and to encourage other major international companies to base themselves in South Africa to operate in Africa. So I think that part of the reform is a very good idea, and I hope that it can be implemented effectively.
Okay. Well, we have time for one more quick question from the audience, so let's take it to that audience member.
Thank you. Madeleine, this is a question for you on trusts. We know that trusts play an integral part in a client's long-term estate planning. The focus of late seems to be very much around the taxation of trusts. And can I ask you, is this quite an ominous phase that we're going to go into with trusts regarding taxation and the abuse of them? Thank you.
Thank you, Brent. A taxation of trust has always been viewed with skepticism. Trust on an international basis is well accepted. So where does the tax avoidance come in, or the abuse? And I think the abuse is where you create a trust and you don't register for tax, you don't declare what you have to in your tax return, you don't apply the existing tax laws that's there. So if you apply the existing tax laws that's there can't be abuse. When you manage and you do what you have to do, it's all regulated properly. It's when you don't do those things that you're exposed. And yes, they are definitely looking at the taxation of trust, and they might change certain things, but I think a trust still, from a purely commercial basis, has got a very valid position in our society. It's protection against credit risk and from other business concerns.
Well, we've come to the end of today's discussion. Thanks so much for all having joined us this morning for some post-budget analysis. I'm getting a little bit tongue-twisted there. It's all for that special broadcast that we've brought you today. Thanks, of course, to our guest this morning, Dave Moore, who's Citadel's Chief Investment Strategist, Madeleine Schubert, a Tax and Fiduciary Specialist over at Citadel, and Professor Alan Hirsch, who's the Director of the Graduate School of Development Policy and Practice at the University of Cape Town. He's, of course, also the former Deputy Director General of the Department of Performance Monitoring and Evaluation in the Presidency. Many thanks to our live audience this morning as well for their participation.